Alicia, good to see you. Thanks for coming. Thanks for making a bit of time to come on. Really appreciate that. I wanted to start or kick off our discussion really by asking you about something that you said to me when we were talking, I think it was last week or the week before. You said that you wanted to help people think differently about investing. What did you, I mean, what do you mean by that, and why is that important to you?
Well, thank you for having me, and thank you for giving me the opportunity to speak in this amazing audience. I grew up socialist, thinking that money was the source of evil and problems. And this is a romantic socialist period. And then I realized that thanks to my boss that worked at Bayer, and he used to call me Professor Castillo, you know nothing about business. And he said, come to the industry and work inside and learn how do we do things. And then I realized that really capital or financial capital can be a source of oppression, but it can be a source of progress.
Mhm.
And I want people to think differently about investing and receiving investments at the same time, because there's a love and hate relationship with money. We tend to think that money is something that certain types of people have access to. And now with the advancements of entrepreneurship and venture capital, we need to recreate a formula that works for everybody because it can be misaligned as well.
Yeah,
That's what I want to change.
let's come back to that in a second, because the other thing that I mean, you've just mentioned it, but the other thing that you said that stuck in my mind was that you didn't feel business schools helped create the right type of relationship with money, or I think maybe you said that they create the wrong type of relationship with money, which you were kind of alluding to then. I mean, what do you mean by that? I mean, what is the right kind of relationship, and why don't business schools teach that?
So I've been teaching entrepreneurship and venture capital for over 20 years in schools around the world as a visiting lecturer, visiting professor, and I used to teach at some schools as a lecturer itself. I have an MBA, besides being a scientist, I have an MBA in entrepreneurship, and then I did a PhD in finance probably 30 years later. So this is what I discovered. Business schools teach about managing resources, corporate resources, or administration, or they teach entrepreneurship. Entrepreneurship is about managing opportunities. There's no bridge between both of them. You can start a company and destroy wealth, and you can destroy wealth at a corporation as well. And technologies can destroy wealth. That is the creative destruction concept of Champeter. What I have discovered in business schools is that we don't have any course that teaches collaboration. We don't have that. So every single concept in school, in business school, up to this point is about winning. But the underlying thesis is that we win because somebody else loses. Entrepreneurship changes that. And that's why I fell in love with entrepreneurship when I discovered that. Entrepreneurship teaches you that you can create something, you can insert something new into their commercial puzzle. The problem is that we haven't found a way to say, let's collaborate. And there's so many options to create wealth by utilizing both resources and opportunities in a more efficient way. And that is one of the things that I want to change. Nobody in any business plan competition, there's always a winner and a loser.
Mm.
And it sort of permeates the thing that for you to win, somebody has to lose. We need to change that.
Yeah, yeah. No, and I think that's an interesting point there. You said a second ago that you wanted to teach people about to invest differently and also to
Yeah.
be invested in differently. I mean, let's just explore what you mean by that, and how are you going to move that? How are you going to do that?
So I'm a very good investor, and I'm not embarrassed about being a very good investor. But one of the things that we do when we invest in companies is we look at the uses of capital. What are you going to use the capital for? And then we try to find ways to minimize the use of capital, because when you minimize the use of capital, you have a higher return on investment, but also you save brain space. One of the examples, I mean, I have tons of examples because I have, 90 companies in my portfolio since I moved to Silicon Valley 13 years ago. But some of the examples is, hey, if you have this material that can be used, or this camera that can be used in automotive, a drone can use that, but also we can use the same technology to extract information from cells. So if you have a company that needs to develop some intellectual property and somebody else has that intellectual property, it makes more sense to get together and create a licensing agreement, not to start by zero. In the same token, when we look at investing, and this ties in with your first conversation about what I want to change in investment. Financial capital is one of the many capitals. If you have a connection with somebody, and that could be a client or could be a supplier, and you make a phone call, and that phone call results in a change of strategy to just save the company 1 or 2 years building something on what I call the other side of the river. So that is social capital. We use that as well. We do production capital. If you have underutilized space that somebody else can use. We just had a company that needed to produce some satellites. I have another company that is building gas stations in orbit. I know they have an underutilized space, so I put them together. Why? Because what one company is using could be used for the other company, and they could collaborate. And by doing that, what you do is that you reduce the needs of capital, but you also reduce mistakes. So that is something that we need to improve. It's not just give me money. The one question that I ask all the founders when we evaluate to invest in them is, what can I do for you? If I had a magic wand, what can I do for you? And this is the big message that, if I may, I would like to transfer. Money is an illusion. We don't need money. We need something, and we use money to pay for it. So when we separate the capital from the need, we're able to do very creative forms of investment that reduce the waste of capital. It's not the use, it's the waste of capital. If I have a client in Sweden. I was just in Sweden. I had a client in Sweden, and they work in automotive, and I have another company that works in automotive. And for 2 years, we've been having one call a year for 15 minutes to ask if they would be interested in this particular technology. And invariably, they come back and they say, actually, no. And we have like 15 minutes conversation that helps us so much in not doing something that the industry doesn't want, because we're so concerned about the innovation that we miss that connection. And that is something that anybody can do. Not everybody has the money to invest in the company, but everybody has the capacity to support an entrepreneur in one way, shape, or the other.
Okay, so I get your point about that. I understand the point you're making. How are you going to achieve that at scale? I mean, because you're talking about 90 companies. That's a great thing. I mean, there are 30,000 companies near where I live in Oxford. I mean, how are you going to achieve your goal in terms of changing that kind of culture?
So going back to collaboration, one thing that I learned when I moved to Silicon Valley to change education, and I didn't accomplish that goal. I did something else. I created an investment club. So one thing that I learned coming here is that the reason why Silicon Valley is so popular is because of the density of people doing innovation and investing. And after I learned that, I never invest by myself. So the only way that we can progress as a society is to collaborate. And that is how we scale. So we scale by having investment clubs or by having funds. I no longer believe in venture capital fund, even though that's how I make my money, even though I'm an investor, even though I have a VC fund. I think that model needs to be changed. But if we can collaborate and we can create investment clubs where we have talent and processes, right process, then we can reduce the friction and we can reduce the waste of time and capital. And I think that is the way to do it. So we had a formula, we tested the formula, now we're growing. And it's not just Alicia, it's not Alicia and 5 friends. We have a club. There has to be more clubs. And that's the way to grow and to continue improving and learning.
Yeah, I mean, I think the learning point is a really important one. Let me just I mean, let's explore for the people that haven't talked about this in the past. What do you mean when you talk about, I mean, the difference between venture capital and a VC club? I mean,
So,
just explore what the difference is so that people understand that.
so venture capital is a type of investment that is very risk. It's not risk oriented. It assumes risk and it's comfortable with risk. So it's the money that you can invest that you can lose. Um, at the end of that curve, it's a formalized venture capital fund. And VC funds don't invest their own funds. They have to go and raise the money from limited partners.
Yeah.
And the limited partners, and it depends which country you are. And the limited partners for example, in the US, they make a commitment, but they don't transfer the funds. In Europe, they transfer the funds. So now, and in Chile, where I did the first seed capital fund in Chile, they transfer the funds. So now you have a bucket of money that you have to spend, that you have to invest. And you usually have a time period, unless you have an evergreen fund that has a lot of problems with valuations. And I'm not going to go there. That's very, very specific. So traditionally, a VC fund has 10 years with up to 3 1-year extensions. So it's between 10 and 13 years. If you're investing in a highly risk company at a very, very stage, you don't have 10 years. You need a little bit more. So we are doing something that is extremely risky in a concentrated period of time with everything against us. And then that is one of the challenges that VCs have. They have to execute, they have to exit at a period of time that maybe is not the best time. I mean, we had the COVID crisis, then we have high interest rates, and we have hybrid networks, and now we have AI. So the markets are very dynamic, and it might be worth to wait 1 year or 2 years. Maybe it's not a good opportunity to sell. So VC, although it's very risky, is very constrained as well, and it's highly regulated. So you have to raise money from limited partners, and limited partners have very limited decision making. And in my opinion, that's the biggest tragedy of venture capital. So we don't want anything to do with limitations. Then you have angel clubs. And angel clubs are a group of people, it's usually volunteer organizations, and there's some very large and some very small. But angel groups usually invest at very early stage, pre-seed or seed, and they act as a group. Everybody makes their own decisions. Everybody decides how much money they want to invest. Sometimes they have different entries in the cap table, so everybody has their own independent investments, and sometimes they come as a group. The problem with angel groups is that you have the blind leading the blind. So you have a lot of people, you have a lot of companies, there's a lot of politics and power dynamics. And it's very difficult to have a consistent output because there's always a friend of a friend of a friend, or the pressure, the the in-laws that want to invest in a friend or the neighbor. So that is a problem with angel groups. And angel groups don't have a good process of filtering. So what I created and what I think, I strongly believe that is the future of venture capital, is to have a club where you can select, you have a team that attracts, filters, selects, and carries a due diligence that is very objective. And that has to be paid. And otherwise, you don't have high quality. And then you have another team that takes care of the post investment, which is the biggest challenge that venture capital has nowadays. Because as I just mentioned, we don't use the social networks. We don't have any ways of using underutilized productivity from some of the investors, and there is a divorce between all the other things that investors can provide in venture capital because they're limited. They don't even know what you're investing. They don't participate in the investment committee. So it's a lot of pressure just on the GP or general partners. So what I created out of necessity was a club where we have a team that evaluates all the companies, but restricts the quality, and we pick arbitrarily. We decide to pick just one company per month, but we do a deep due diligence. But then what happens is we want to have every member the flexibility to invest or not to invest. And we want to provide discretion, and we want to provide opportunities to have a liquidity event to transact internally. I didn't know that at the time that I created it. I created that so my friends could invest with me, but they did not want to join an angel group. But as it turns out, 6 years, almost 6 years later, we have our own, because of the way we invest, we have one entry in the cap table that is, it could be 3 members invest in this company, 8 members invest in the other company, 30 members invest in the other company, but we have one entry in the cap table. So any transaction that we have internally doesn't affect the company, because that creates a lot of operational and accounting problems. I think that is the future. But there's another advantage to that. We don't have any limitation in terms of types of rounds. So there's a company that we have invested 5 times. Every year they come, we like the company, we continue to invest. An angel group usually invests in pre-seed and seed, and they don't invest anymore. And a VC has a thesis. Remember, I have a VC, so
Yes.
we have Series A to Series D. So you cannot get out of that. But the other advantage is that we can continue investing. And as it turns out, if we have a company now, we can see what that we've invested before. We can see what they did last quarter. We can see if they're on the right track. We can see, usually you have to pivot, you have to change because the market is so dynamic. But we have all the previous reference. So now we have a deal flow. We have it already established. We already know which companies are going to continue to raise. Any new member can come and participate in the previous round and can do, a test drive. And funds can do that, and angel groups can do that. So I strongly believe that is the way we need to do it
Look,
going forward.
I mean, I see your logic, really. I mean, it's about more flexibility at one level, isn't it? Let me just ask you, was there an aha moment that kind of where this different concept, this wealthified club, I think you call them, did that sort of just pop out of your head one day, or did it evolve over time? I mean, how did the concept formulate?
No, that is so interesting. So, I grew up in El Limón in Venezuela. It's not even in the map. Venezuela is now everywhere, but it's not even the map. A little town, hiking, we share that, barefooted all the time. I'm a scientist by training. I love science. So if anybody, and I love gardening, if anybody would have told me I'm going to end up in Silicon Valley investment, I said, no way, Jose. So it's a combination of just adapting to the reality and seeing how can I have a bigger impact in socioeconomic progress. So for me, science is very important. But if we don't apply science, and if we cannot create good jobs, and those jobs cannot create good taxes, we're not really supporting socioeconomic progress. And then we need to invest in art as well. So that's another area. But how I got to the club was that I was very frustrated at St. Hill Angels. When I moved to Silicon Valley, here's the thing, I moved to Silicon Valley to transform universities because I don't like the way we teach. I'm going to start a university. We're going to change that. Singularities here. I can't do that. I'm alone. I don't have any network. On the side, I always invested. I always like investing because that's how I make money. So I joined St. Hill Angels. In a couple of years, I become the co-chair of life sciences because I used to be a life scientist. And most of the people, even though they were very, very talented, they didn't have strong biology background. They were lawyers and accountants and software developers and engineers. And so I had that competitive advantage. I could go to the lab. So that was a progression. Then I said, well, I joined the board. I said, okay, we need to grow this in a different way. And we have a lot of waste, and we have a lot of bed companies, and we're overwhelmed. We don't have a good process. I'm an engineer by training and a scientist. So it's like everything has to be very methodical. So then I go and I said, how do we improve here and there? And it's a constant improvement. But then what happened is many of my friends wanted to invest in the companies that I was investing, but they did not want to join an angel group. So over the course of 2 or 3 years, we kept talking about doing a fund. And I said, I don't want to do a fund because I'm going to be 65 next year. And I said, I always joke about it. By the time we have an exit, I'm going to have dementia. I'm not going to remember. It doesn't work for me. So everybody gets that. And most of my friends are, in their 50s or 60s, and they don't want to wait 10 years, 20 years. So I didn't want to do a VC. So it took me like a couple of years to figure out what is it that I want to do and what is it that I don't want to do. I started the club, but the first day that we presented a company was March 2020, the day the stock market crashed because of COVID. And so everybody was in shock. That company actually printed organs, and that company was sold for 50 times our investment 13 months later, but that's an outlier. And I didn't know it was going to be so hard. But what happened is I said, okay, I'm going to launch this with 10 people. And I spent a lot of time and money just figuring out what is the model. And so the model has different things. One is that we have one entry in the cap table.
Yeah.
Everybody comes in, and it's not because otherwise it's a nightmare for the company. That created this massive amount of value, which is the secondaries that I didn't know at that time. So that's one thing. The other one is we only present one deal a month. We don't want to have 60. We see 50 to 100 every month, but we only present one deal a month. And we keep that. And sometimes it's so hard because there are 2 or 3 companies that are extraordinary. So that was the second one. The third one is we're going to have a team dedicated to post-investment because we don't invest and pray. Or, I mean, some people do, but I'm just too active to do that. So we did that. We launched it. Of course, we didn't make an investment in 6 months. I continued to invest. Oh, that's the other thing. I invest in all the companies. So literally, it's me deciding if I want to invest or not, and people can come and invest with me if they want to. So I wanted to have that flexibility. But then after that, we started seeing, well, people want discretion. And that's one thing that we do differently. At many angel groups, everybody knows who's investing in what. That creates a lot of power dynamics. So, hey, how come you didn't invest in this? This is my company. This is my friend. We don't have that. The only person that everybody knows how much is investing is me. And I say, this is how much I invest. I don't make investment recommendations. So we have a very objective
So let me
deal analysis. And we continue improving that. And we keep, and every month, we have a meeting just to see what do we need to improve or change.
So when you started out, I mean, I can see how the model developed. When you started out, what was it that you were trying to achieve? Did you want to say, I want to invest in 1,000 companies or 100 companies or 10 companies? I mean, what is it you want to achieve?
Yeah,
And,
that is
what
such a
sort of
great question.
barriers are
That
standing
is
in your way?
So that is such a great question. Think because I sometimes I forget about that. You know what I wanted to do? I wanted to increase the level of sophistication for angel investors around the world. So I have members all over the world. And what I found is that the quality of deals in Silicon Valley is usually high. And if you weed out the bad ones or the garbage, you have some diamonds. And my goal when I started was to provide people access to high quality, vetted Silicon Valley deals. So then they would be better prepared in their local communities to invest. That was my initial goal because I already have made my money. I love this. My son works with me. My daughter is a member. Now we have a family office, but that was not the intention. The intention was let's provide people with an opportunity not to do the training, but to learn. And our conversations are amazing. I mean, I always say there's no stupid questions. It's just stupid people. Everybody laughs. But we really, really nail down what we like, what we don't like in our 1 hour a meeting. So that's what I originally wanted. It has morphed into something else.
Okay. And what is it that you like about that job? I mean, you mentioned how you really enjoy it and you're not doing it for the money, as it were. What is it that you like about it?
Well, I do that for the money, but I do that. So I co-create wealth with the founders. I don't get a salary. I am all into the end. So we do get a 20% carry. We will get that. But I invest in all of that. So this, for me, is the best antidote to depression. So the world is very difficult at the moment, and it is so exciting to talk to entrepreneurs that are, some are completely crazy, some are delusional, some are they just want the money. So we with them out. But I really think that there's great technologies and there's great innovation that should be available to the world. And I want to be part of that. I want to be part of that success. And I don't have the capacity to invest $1 million in each company. So I cannot do that by myself. I need to do it with other people. But I need to have the flexibility to say, I'm not going to invest if we don't reach this level, because there's some rounds that are very high. And if we don't, I'm not going to put $1 million in a company. I'm just not going to do that.
Yeah. So let me ask you, you mentioned technology. Now, the thing at the moment is AI, which everyone's talking about. I mean, I read an interesting article this morning about the pace of its development and how fast it is improving at doing everything that it does. What's your take on the way AI is going to shape that world? I mean, I spoke to somebody a while ago who was talking about creating an AI-based investment tool. I mean, what's your take on the impact that AI is going to have on the way people invest? Have you got thoughts on that?
Yes, it actually 2 years ago we did a webinar about decks, and because people are making decks that are beautiful, but they're not readable by AI. And
Mm.
now all the funds are using AI to evaluate. And I have a list, and you can go on LinkedIn, and I have a list of people. You can go and check that. So here's the thing. AI is the equivalent of internet. I don't know if you remember the times before internet. I
Yes, I
remember
do.
traveling before internet.
Yeah.
I remember going to Thailand from Venezuela during the Gulf War, and there was not even a Thailand embassy in Venezuela. So it was, you just rely on a lot of people telling you things. I remember people selling databases of potential buyers. So I think this is a huge change. The interesting thing is that in Silicon Valley, we think AI is going to replace a lot of jobs. We have a very high level of layoffs in January and February, but we had it before because hybrid tech. I mean, we keep having that. In the USA, AI is seen as a threat, but in Europe, when I was in Europe, AI is seen as a great innovation for people to do their jobs more efficiently, or for senior people to come back and do some work that otherwise would be too hard for them. So it's going to be plus and minuses. The biggest reflection for me is that if AI is going to do the thinking and robots are going to do the doing, who's going to do the feeling? So I think we're entering an industry of relationships.
Mm.
No AI can replace a hug. And I can say that because I'm Latin American. But the truth is that when you talk about something that lifts your spirit, the other person feels that. And that is something we need to keep. We need to recover that if we don't have it. And we need to keep, because now we're going to have a whole bunch of issues with mental health and solitude, because it's so easy to get things done without another human being. So
Mm.
I think that is something that we need
I
to
mean,
work
the,
on.
the, the other thing that struck me about that was that when AI can do everything, it can do the thinking and it can do the doing. I mean, your competitive advantage comes down to your people, doesn't it? Because they're the people that can do things differently. The technology, in one sense, does what it's told at the moment, doesn't it? I mean, what's your take on the way competitive advantage is going to develop or erode? Do you think that AI is going to? I mean, because it's so easy to access, it will be ubiquitous pretty soon, won't it?
So two things to add. One, AI is going to create more divisions,
Mm.
because AI is made to validate what you ask. AI would never tell you, "Oh, you're wrong. Maybe you should look at it this way." No, AI is made to validate your assumptions. So that's very risky, because we're learning to only be secure about what we say. We're not learning to be compassionate. We're not learning to question ourselves. We're not learning to be skeptical. So that is a big problem. Um, and but let's take that a step farther in terms of competitiveness. AI makes everybody mediocre. That's what it does.
Mm.
It prevents you from being awful, but it prevents you from being spectacular. It puts everybody in the middle.
Mm.
And the industries where I invest are outliers, are made by outliers. So what we use AI is to avoid huge mistakes, embarrassments, but we don't use AI to be extraordinary. So the upside doesn't come from AI. It has to come from your ingenuity, creativity,
Yeah.
and
But
AI can help you remove that. Um, I I want to, if I may, I want to share a story of one of the professors here, actually not here in the East Coast. he asked the students to do an analysis of a business case, and he told the students, you can use AI, I don't care. So when we teach in business schools, we teach case studies. Professors usually request an essay before the class, and we go and read the essays to see how the students thinking and if they learned something, and that has to be submitted before the class starts. That's usually the norm in business case, in entrepreneurship in business case, in MBAs using business case. So these professors said, we're going to do that. And then what he did was he used AI to evaluate the sheer volume of essays. And he displayed the statistics. So 98% of the students have used AI, and they all had the same characters, the same challenges. They have defined the same strategy.
Mm.
And the 2% that didn't use AI were completely outliers. So now you can see how that's going to impact the future generations.
Yeah, and let me ask you about something you said, isn't it, about the piece about reflecting, thinking, being critical. I mean, I think kids come out of schools, I mean, and universities perhaps, being very confident, which is a good thing. But I'm not sure they're necessarily great at asking questions, at thinking critically, at reflecting. I mean, and what's happening now is that because AI can do it, I mean, AI, you want an essay written, AI can do it. You want a report written, AI can do it. The critical skill that we need is people that can think critically, that can are curious and can reflect and generate ideas. But my take on the education system is it's not producing people that do that. I mean, what's your take on that? I mean, do you think I've got that wrong? Do you think that the education system needs to change, perhaps? I mean, what's your take on that?
I think the education system needs to change all the time.
Mm.
It has changed all the time. I mean, we used to, people don't understand how society as a whole progresses. I mean, we used to not allow certain type of people to read or write. And by allowing people to read and write, look at all the things that we have accomplished. But that's not enough. Um, and the thing is that it's so difficult to measure education because the results are long term. So I think critical thinking is important for happiness. It's a completely biased thought, because I studied the biology of happiness because one of my kids was severely depressed, and I said, the therapy is not gonna work, and this is not gonna work. So I started trying to figure out happiness in the animal kingdom, enjoy in the animal kingdom. So I wanted to remove some of the anthropological issues. But the peak of happiness occurs before the event, when something that we didn't know was possible suddenly becomes possible.
Mm.
And that has been developed. If we remove the uncertainty, we remove the biggest possibility of joy.
Mm.
And that is something that we need to be conscious about. And that has to be embedded in education. Carol Dweck, who works here in Stanford with gifted kids, she
Mm.
has done a ton of work on that, because that is a challenge for gifted kids, because they know they're going to excel. So how do you keep them motivated? And one of the reasons that some people are motivated and are happy is because they're always expanding their boundaries. So it was what I just said, I
Mm.
know what I can do, but I don't know what I cannot do. But I need to push myself. In my personal life, I see my life as a ladder. So I go through a pace of, oh my gosh, I feel so good about myself. And then I get bored, or I said, okay, I'm going to go there because I've never been there. Let me see what it is. And it's an uphill battle. But it's very exciting to go and do something that you've never done. We need to bring that back to students. And the problem with students is that we take what is called the internal locus of control outside of them.
Mm.
So somebody that is not you defines your worth. And they have to, because the whole purpose of education is to give you an accreditation. So you need to have a note. But what happens is your grade in your note does not depend only on you. It also depends on how you relate to your group.
Mm.
And slowly but surely, the opinion that other has of yourself is more important than the opinion you have of yourself. And you can only progress when you have that sort of internal introspection. I don't know how we're going to change that in education because we need to certify that people can do that. So I don't have an answer for that. But the reality is that we need to create more critical thinking, but we need to create the joy of figuring things out and the capacity to take risk, knowing that we might fail.
Yeah, I mean, somebody famous, I don't know who it was. It was a supermarket entrepreneur said to me once, if there's no risk, there's no joy. And I mean, it's always struck with me as a really important thing because that's partly what makes entrepreneurship so enjoyable, isn't it? Is that you're constantly taking risks, trying new things, exploring new ideas. That's what I think makes it so exciting. Let me ask you about your journey. I mean, you've developed a very new and very different kind of approach to investing. When you look back on that journey, what have you learned? I mean, have you changed as a result of what you've been doing? I mean, do you think differently now compared to the way you think about things when you started out? I mean, what have you learned on the way?
Oh gosh, I haven't thought much about that, but I think my biggest shift was the realization that money could be a tool for progress. That was the biggest shift for me. Um, because I grew up in a system where money was misused by others. And my parents were very protective of, we're not going to help, we're not going to contaminate our family with that. And I was just listening to Ricardo Hausman talking about the situation in Venezuela. There was an exquisite presentation. So I think that was the biggest shift in me was that. Then I had another big shift when I had teenagers. My kids are in late 30s now. It was the realization that I was not perfect. And the realization that thinking I was perfect was preventing me from enjoying life and from being more human. Because up until that time, I have had an extraordinary life. And, my life has been magical. I've been so fortunate. I work very hard too. But there's a lot of people that work hard too, and they don't get to accomplish what I have accomplished. So it's a combination of many, many things, but I'm extremely grateful about life. And I remember vividly to this day a conversation I had with one of my kids, and I was so frustrated. I said, "Why can't you be normal?" And we were having breakfast, and she said, "Because I'm not the perfect kid. That's why I can't be normal. And you're not the perfect mother either. And it's a waste of time to have this conversation." And she left, and I kept thinking, it is a waste of time to be perfect. So that was the second huge change in my life. And the third one was when I came to Silicon Valley. I used to come here a lot. I've lived in many countries, but I used to stop here on my way from Perth, Australia to Aarhus, Denmark. So I lived in Perth and I work in Aarhus. And because I do a lot of things with innovation, I always stop in Silicon Valley. And that is the third biggest awareness that I've had. That is the power of a tribe. And you pick your tribe. You don't pick your family, but you pick your tribe. And I didn't come from the right family. My family was amazing, but I shouldn't be doing what I'm doing now. I didn't grow up in the right country. I didn't go to the right schools. And here I am. So I noticed that there's some people that try to be more cliquey. It's like, well, if you didn't go to Harvard or Cambridge, you're not worthy of having a conversation. But the reality is that there's so much value in diversity and inclusion that I'm very drawn to that. I'm very drawn to people having, different route to get here. But we cannot do that alone. And I used to think that I was alone just because I wasn't in that tribe. And now I realize that it's very powerful to have a tribe, but that tribe has to be respectful of you
Mm.
because not everybody is respectful. I respect money and I expect people to respect money. That is not very common in Silicon Valley. And then you have to give and take. So you have to be useful to others, but if you have to demand other people to help you. So I think that was my third one. And who knows what comes last after this
And
my
if
life.
well, if you were to give yourself one piece of advice, if you were starting over, what would it be?
I think I always ignore other people's opinions. I was, the imposter syndrome. I didn't have that. I was delusional. I was on the completely different side, which is very typical of entrepreneurs. But I was beaten up so often that I think I would have continued telling myself, just ignore those people.
Hmm.
Because in so many occasions I had to stop and say, it can't be that everybody's wrong. But sometimes everybody's wrong. And so, and that's where you get the huge leaders where they show, hey, you know what? The world is not flat. So sometimes everybody's wrong. And I think that is, I always think highly of myself, but that is the one thing that I think I should have put it in my mirror in the morning. Sometimes everybody's wrong.
And that's the advice that you'd offer to somebody.
Yes, sometimes everybody's wrong.
Yeah, and it's really important that I think because that's how science progresses, doesn't it? People find the hole in the conventional wisdom. I mean, I'm a great believer that conventional wisdom is always wrong. It's a question of figuring out how it's wrong. Um, so, Alicia, thank you for taking time to come and have a chat. I mean, absolutely fascinating story there, and really, really interesting. And what a great proposition you've developed. I mean, I think it's to try and reshape the way people invest. I mean, that's pretty ambitious, and I really like to see ambition. So thank you for coming on and sharing that story with us.
Well, thank you for having me, and I hope people get excited about doing things in a different way because we need
Sure.
that.
Yeah, absolutely. Absolutely. Thanks again, Alicia. See you soon.
Bye bye.
Bye
Thank
bye.
you.